Hello. Good morning, Lagos. Good morning, everyone. This is Follow the Money, brought to you by Nairametrics. My name is Ugo Dre, and we do this every Monday, 8 to 8:30 p.m. on the station. All right, how has your weekend been? I don't know. At least this morning, we wake up to crazy fuel queues yet again. If you haven't filled your tank yet, you're probably somewhere in the filling station trying to get fuel, or you just have remnants of what you bought last week in your fuel tank. Got to manage it pretty well. Looks like it's bad out there. Another week, another trouble. Anyway, we'll have a bumper show for you today. Lots of things to discuss as usual on this show. Yeah, by the way, if you're just listening to Follow the Money for the first time, you can always check back on any of our previous episodes on any podcast platform that you like to, listen to, whether it's Spotify or Apple Podcast or even Google Podcast. You can get, or even YouTube as well. You can get everything right there. Follow the Money is a stock market related show, and where we just, basically give you unique insights into the capital market, especially Nigerian stock market. And due to popular demand, we'll probably also be bringing tips from or content from the foreign stock market as well. We know a lot of Nigerians like to also buy US stocks. I mean, who doesn't want to earn foreign income? So we'll also be bringing insights there in the next weeks. We're working on that seriously. All right, so busy week last week. We're going to start first with the macros. Yes, we had the inflation numbers out last week. The Bureau of Statistics released the July inflation numbers, and inflation decreased for the first time in, I think, was it 19 months or thereabout, at least over 2 years. We saw inflation drop to 33.4% in July from a 2-decade high of 34.19% in June. So that was the first time it was dropping since December 2022. So almost 2 years, almost 2 years, yeah. So a lot of people say 33.4% is pretty much still high. I mean, that's still high. But man, you gotta take the wins no matter how small they are. So inflation numbers dropped. And what was significant was the driver for the drop. The driver for the drop was basically food inflation. So food inflation did drop for the first time in a while. We saw food inflation dip under 40% year on year as well. So the gist is that, look, August is usually the harvest season, so you get a lot of food being harvested and being distributed across the country, and a lot of people who probably had reserves are probably going to push them out as well. So food prices will likely come down. We hear that we've started seeing food prices come down in some markets, particularly staple food items. I don't know, is that your experience? Are you seeing food items go down? I was talking to someone yesterday who said, look, I haven't said anything. I'm still buying it for thank you. So I don't know if that is what the experience is, but the gist out there from surveys is that food prices are dropping, and that's a good thing for the economy. When inflation starts to fall and food prices drop, then you could as well start to expect stable exchange rates, and then businesses also can even be a lot more profitable, because then they can, cost is a bit maintained and they can manage costs more effectively. And then who knows, maybe they can pass on that, some of those savings to consumers through lower prices as well. So it's a good thing. You always want inflation to keep dropping, because it also has, reverberating effect on the economy in general. So looking forward to seeing inflation numbers drop. And by the way, this was August. This was July rather. So you actually expect a lot more drop August, September, as we close the end of the year. So do I think inflation numbers are going to be maybe mid-20s by the end of the year? I doubt it, seriously. I still think it's going to be sticky for a while before we start to see major drops. Let's also remember that we still have a little bit of fuel subsidy, so we're not really seeing the real price of fuel, right? Let's just say. So, I mean, if that happens, that could also trigger inflation as well. But we're going to take the small wins, like I mentioned, inflation numbers down for the first time in almost 2 years. So at least we got some good news out of inflation numbers. By the way, month-on-month inflation also slightly lower at 2.28% compared to 2.31% as well. So it's an all-around good news. I mean, I looked at numbers over the weekend and I was kind of pleased with what I saw, that at least we're seeing, some drops, especially in key indicators for the consumer price index, which is basically how we measure inflation rate. And so, yes, good news, Nigerians, has positive effect for all of us. All right, so what else was on the macros last week? There were also a lot of releases. I think diesel prices were out last week. Some of the food price watch data was also out last week, and all around it kind of looked like those numbers were basically stable, like prices were basically stable. So I mean, not saying that prices aren't still high. Let's understand that that's not what I'm saying. Prices are still high out there. But being stable means that at least it's not rising as rapidly as it was in the early part of the year. So it looks like we kind of hit like a ceiling for price increases. So hoping that there won't be any major triggers again. I'm hearing that maybe one of the reasons why we're seeing fuel scarcity is because NNPC find it difficult to pay, for the subsidy part of the fuel. But NNPC came out over the weekend and denied it and said, look, that's not why there's fuel scarcity. They're not owing anybody $7 billion as they claimed. Also, some papers wrote $6.8 billion. That's why NNPC is owing, and maybe perhaps that's why we're seeing this fuel scarcity. But NNPC has come out to deny it. So that's it for the macros last week. And we go right into today's gist. This is the part I enjoy. All right, so the stock market all-share index ended the week 1.5% lower than the previous week and closed at 97,000 points. We are now below that 100,000 mark. You'll recall when I was always making so much noise about the 100,000 mark that we hit, some months ago. But looks like we're below 100,000. Looks like stock market investors are also kind of like pulling back a little bit. Some people say perhaps it's the August effect. August is a holiday period, so most traders are probably on holiday, right? Even though I don't necessarily believe that, but that's what some people say. Anyway, overall, market sentiments were pretty much bearish. We saw declines across some of the major indexes, except for the insurance index. Insurance, recorded, just eked out a little bit of growth. Consumer goods index, also a little bit of growth. Oil and gas, driven by Owando as usual, up a little bit. And then, but I mean, the broader index itself, where you have the banking, index, industrial goods index, like the major heavyweights, all recorded slight losses last week. And so that's why the all-share index kind of pulled back from the week before. So stocks are in a bearish mood at the moment. So we got to, watch that space. But who were the top gainers? And top gainers last week, we saw Guinea Insurance, an insurance company, top at, gained 17%. Have you heard of that company before? Well, they gained 17% last week. University Press also gained 12%. NASCON, company in the Dangote Group family, gained 11.5%. Dangote Eternal PLC also gained 11%. Dangote Sugar 10%. So this is just a cross-section of some of the gainers last week. So as you can see, it wasn't like there was a lot of gains. Like when you start to see gains like that are not above 20%, because I mean 20% in a week suggests you probably gain maybe 4% every day. You know what I mean? So at 20%, not that significant. So last week was pretty much tough, and that's why no surprises here. You had a lot of losers during the week as well. So mostly dominated by small cap companies, but we did have Cadbury in there, CWG in there. Those are not necessarily small companies per se, but they all recorded losses during the week. So pretty tough week for the Nigerian stock market. I don't know, looks like maybe investor fatigue somewhere is happening. But the thing is that when you have bearish periods like this, I mean, there are a number of things that you can do. You can just wait it out and see what's going on, whether there's anything fundamental driving some of these bearish results that we're seeing. Is it because maybe investors are selling more or buying, or investors probably just taking out profits? And then sometimes you also want to look at some of the companies that are on the list of losers, and if maybe they're significant companies. Because if they're like heavyweights in there, then maybe there's just a broader market sell-off. But, from what I see, I don't really see a broad market sell-off per se. Most of the major companies didn't lose more than maybe 5% during the week. I mean, look at it now. From the top 10 losers that I have here, there weren't really major, apart from maybe Boa Cement and Owando that lost in double digits. A lot of the others, didn't lose that much. So the major heavyweights, probably the suits like the MTN, the Dangote, Siemens, the Airtels, the Zenith Banks, the GT Banks, they didn't really fall off that much. So maybe not a bearish market per se. And then second thing is that when it's a bearish market, another thing you can do is that's an opportunity, buy opportunity out there, because then some of those stocks that you can pick on the cheap, you can probably look at them. You can probably buy them when the market is a bit bearish, because who knows, maybe, market is bearish because traders or investors are just selling so that they can pick some profit, like I said, and then leave opportunities on the table. So you want to take cognizance of that. Talking about corporate announcement, there were a number of announcements during the week. Boa Cement, if you have shares in Boa Cement, they did adjust their share price last week, which also explains why they were part of the top losers with about 14%. So they adjusted their share price by 2 naira. Now, what that means is that they basically paid dividend to their shareholders. So when you pay that dividend, they gotta adjust it from your share price so that it reflects the reduction in their earnings or in their retained earnings. And so that is why the share price closed at 126.9. I think I kind of touched on Boa last week. Boa share price at 126.9. It's pretty low for this company, even though in terms of price earnings ratio it's trading pretty high. But for a Boa, that kind of looks like a buying opportunity somewhere in there somehow. So it's one stock that I'm going to put on my radar and watch it and see what's going to happen, because I haven't seen this stock that at one point this year was at 180 naira per share. So probably want to pay attention to. Or was it Boa? Yeah. Boa Cement, exactly. So you want to pay attention to Boa Cement. All right, Flour Mills as well also closed at 44 naira. That's also because they paid dividends. So if you're a Flour Mills shareholder, you should have gotten an alert by now. If you don't have an alert by now, you probably want to check your registrar or call your stockbroker to find out what has happened. They paid 1 naira 80 kobo, during the week. So share price closed at 44 naira 20. As well. Then, of course, FBN Holdings, that's one of the Fugas Bank. Also, share price also got adjusted by 40 kobo, so to close at 21 naira 60 kobo, also due to dividend payment. So, I know a lot of people out there are First Bank or FBN Holding shareholders, so you might want to check as well if you received an alert. I love alerts a lot. So, if you did receive an alert, then that means you've gotten your dividend paid to you. So check it. You don't want to miss that money. That money is very important right now. So those were the 3 major corporate announcements during the week. So I'm going to quickly touch on recapitalization updates before we go on a short break. So there were a number of updates last week. We all know that we're in a recapitalization season where banks are trying to raise capital. By the way, have you bought any yet? I hope you've been looking at these things, because these opportunities don't come all the time. So I hope that you've seen some bank stocks or some banks public offers that you want to buy. I mean, you don't have to buy all of them, but I think there's some of them out there that you might want to take a closer look at as a buying opportunity. But there are 3 of them here that made some remarks during the week that I want to bring to your attention. First off is Fidelity Bank. Fidelity Bank said that it has essentially ended its offer. That's the first phase of its public offer. And the gist is that they did surpass the 127 billion target that they set. Incredible. So I'm sure Fidelity Bank staffs are probably going to be very ecstatic right now, because they were first out of the block and they have cleared their public offer. And according to the CEO, these are her words. She said, "I'm delighted to announce that we have met and surpassed the capital raise target we set for ourselves in the first phase of our capitalization exercise." So that is straight up from the CEO of Fidelity Bank. So from what I gather, the next step is a private placement that they're going to do, and then I think they're probably going to do another offer, and then this just sort of closes got to pay attention to this bank, because if they are successful with these offers, then it's likely going to be a tier 1 bank. Like, it's going to be difficult not to classify it as a tier 1 bank. I wonder what we're going to call it now, F2F gas or FUFU gas. I don't know. Anyway, till then, but they finally have hit their public offer target. Now, Zenith Bank also hinted last week that it could likely extend its own public offer as well. And the gist is that they're extending public offer because they think that they might also be oversubscribed. Now, I mean, there are two reasons why you extend the public offer. It's either because you think that, maybe so that you can increase the number of, shares on offer so that you can accommodate a lot more. Or maybe some of your investors are telling you, look, they need more time so that they can buy the shares. So maybe, but the hint is that they could also extend their offer. And then is also, the CEO also came out last week at their fact behind the figures, which Nairametrics covered very well as well, said that, look, there's fear that if they increase their capital or they raise a lot more capital like all banks are doing, that it could affect dividend yield. So dividend yield essentially is the dividend you pay per share divided by the share price of a company per share. And I mean, I would always use the share price that I paid for, or my own share price of when I bought the company's stock as my own dividend yield. So the lower your dividend yield, then I mean, the lower the return you're getting from that company. And so Zenith is saying, look, yes, but before I get there, so also the more capital they have. So imagine if your capital is 100 naira and then you make 10 naira profit, or you pay 10 naira dividend, then dividend yield is 10%. Simple, right? So imagine you now increase that capital to 150 like most banks are doing, or to 200, right? So if you pay the same 10 naira dividend, then the dividend yield now becomes 5% because 10 naira divided by 200. So that's essentially what Zenith is saying. So they're saying, look, yes, we know we're going to increase capital, but hey, dividend is likely going to increase as well. So you might also still get the same yield, if not even more. So it'll be interesting to see how that pans out. But they also hinted that they might also, extend their offer because it looks like they're going to be able to subscribe. Access Bank has also extended its own right issue. Right, Access Bank's own is a right issue and not a public offer. So there's a huge difference. Right issue is for existing shareholders, and public offer is for new and existing shareholders to buy. And so right issue, Access Bank is extending its own right issue, and it's now going to close on August 23rd. 2024. So not that they've increased, the number of shares they have. I think it's still 17.7 billion shares on offer, but they're extending their right issue for until August 20, by 10 days to August 23. So not sure whether that stock is, whether the public offer is doing very well or not. Not pretty sure, but I mean, if you listen to Access Bank guys, they give you an indication that looks like it's going well. So interesting to see how that pans out. So that is the gist of recapitalization exercise for last week. And when we come back, I'm going to give you a hit on some stocks that did pretty well last week. Caught my attention. 3 stocks here. We'll be back in a bit.
Follow the Money with Ugo Dre.
Yes, you're listening to Follow the Money with me, Ugo, in the studio, Classic FM 97.3. And of course, you can always listen to any part of the show, previous, this current one, anytime you want. Just go to any of your popular podcast platforms and then search for Nairametrics Follow the Money, and you would see it. And just bookmark it, like favorite it, or whatever it is that you need to do so that you can't miss it. And of course, we've got loads of other interesting podcasts on these platforms. All right, so back to the second half of the show, and we're going to talk about some stocks. Like, if you're somebody who is this show is about people who are looking at making money, like in the stock market and investing, right? So that's what it's for. And so, as usual, I would always, give you some of my some stocks that are on my radar, stocks that pop on my radar that caught my attention during the week. And there was one that caught my attention, Julius Berger. I mean, needs no introduction. Everybody knows Julius Berger. But something happened last week. Julius Berger share price hit 130 naira per share. Guys, like a couple of years ago, this stock was trading at less than $30 or so. Like 130 naira per share. And it's been up since the beginning of August. The stock has been on the buy side, rising by about 34% from its closing price in July. So this stock has gained more than inflation in 1 month. So when people come out and say, look, the fear stock market will lose money, hey, anytime I'm on this show, I'm always telling you about stocks that post solid returns. So this is 34% in less than a month already. So, and I mean, the fundamentals are pretty much solid because, the company has actually been doing well. Results were solid when they announced their earnings a few weeks ago. So, interesting that the stock has done that well. Share price is already up 360% in 1 year. This stock has gained 360% in 1 year. You want me to repeat that? This stock has gained 360% in 1 year. And of course, this year alone is up by about 850%. So solid stock there. Julius Berger, pay attention to what's going on there. It's been doing pretty well. They're also attracting a lot of businesses from the current government. Revenue is also growing. Profit is growing. So all around, looks like the company is doing well. But maybe that's not why the share price is going, because, I've always said that fundamentals don't really align with share price growth in Nigeria. Share price growth is usually driven by a number of factors. I'm probably going to speak to them one of these days on my show and try to explain to you why companies' share price go up, especially in Nigeria. That's my own theory. But in the meanwhile, we move on to Seplat. Seplat also did pretty well last week. Seplat at some point crossed the 4,000 naira mark. Yes, Seplat crossed the 4,000 naira mark. That means it was trading at 4,000 naira plus last week. But the share price kind of pulled back later. I think it was also adjusted for dividend, if I'm not mistaken. And so the share price was now closed at 3,682 naira. But Seplat has been one of the best performers this year as well. So the fact that it hit that suggests it could hit that number again. I won't be surprised. And by the way, Seplat is an upstream oil and gas company. So oil and gas companies are in the money at the moment because, they earn in dollars, oil prices are high, and in dollars, operating costs here in Nigeria, most part of it probably in naira. I know Seplat reports, in foreign currency, but the fact that, dollars are doing pretty well, they're doing pretty well in terms of earnings in dollars. Looks like that was also supporting the share price growth. And of course, Seplat is still in the middle of a major deal that suggests that it could close. And if it closes that deal, that's even more value being created down the line for that company. So that's one stock that's also on my radar. So you probably want to look into Seplat and check out what's happening there. Share price dropped to 368, but won't be surprised if it goes past 4,000 naira again. I know when you hear 4,000 naira per share, people are like, no, look, I've always said, do not look at the absolute share price. That's really, a share price can be 10,000, can be 40,000. It's really irrelevant. Doesn't really matter. Why is that? Because share price is essentially the market value of a stock divided by its outstanding shares. So I give you an example. The market value of a stock can be 100,000. Right, and the outstanding shares is 100,000. That makes the stock 1 naira per share, right? But you could also have the same stock. The market cap is 100,000, and then the number of shares that it has is 8,000, right? So that makes the company's share price 100 naira. So 1 naira versus 100 naira, but it's still the same 100,000. So it's still the same stock, the same value. Okay, so whether you buy it at 1 naira or 100 naira, it's the same market value. Okay, so, same thing you have with the person who bought at 1 naira versus the person who bought at 100 naira, two different stocks, but they all have the same market value. So, but the key differentiating factor is the multiple, right? When you look at the share price versus the earnings per share. I'm going to get to that later at some point. All right, so we go to Presco. Presco also hit my radar last week. Presco also jumped 18% in August so far and hit 477 naira per share. I told you Presco, Okomo Oil are one of my favorite stocks, always been in my portfolio, on my radar as well. That stock is doing pretty well, and hit a high number last week that got our attention. So if Presco is doing that well, then you want to pay attention to Okomo as well, because Okomo kind of like goes in tandem with Presco in terms of share price appreciation. So three stocks on my radar: Julius Berger, Seplat, and of course Presco doing pretty well last week. Now we move on quickly to a major result that came out last week. Union Bank. First of all, Union Bank shareholders or Union Bank fans, looks like there's a turnaround going on there. I mean that's what I can observe. The oldest bank in Nigeria, or the second oldest bank in Nigeria, I beg your pardon, reported a pre-tax profit of 71 billion in 2023, which was 138% higher than the 30 billion it did in 2022. So this is the bank that is awaiting acquisition. Remember that there was just that it was acquired by Titan Trust Bank, and then the CBN came in, or was it the FF, one of the FRN or whatever. Anyway, there was some investigation around it, and that whole deal was suspended or is under review or something. And so they had a new management come in there, and looks like the new management, either with the existing staff, probably doing some kind of turnaround in the bank, because I was pretty surprised to see the sort of numbers that they did 71 billion in profits during the year. So interesting. Gross earnings was 393 billion for the bank, and net interest income 90 billion, up 53% for the bank. So pre-tax profit, like I mentioned, up 138%. For the bank, and then loans and advances still 1.4 trillion, and then total assets 4 trillion. So still pretty strong bank. I mean, even though it's nowhere close to what the Fugas are in terms of size, but for a bank, it's at 4.2 trillion is better than a lot of the tier 2 banks that I've seen out there. So yeah, good news for those the stakeholders of Union Bank. At least it's probably done well to boost their capital raising efforts or their plans to be acquired. I still think that the bank is going to be acquired sometime this year. You're probably going to hear an announcement sometime this year, or perhaps early next year. But the fact that the numbers are doing pretty well, it's good for them. They were doesn't mean that there ain't some downside. We did see some downside as well. There was a decline in their in net income after impairment losses. I think they also experienced some FX losses as well that hit their numbers. So the result may have even been better if it wasn't for the FX losses that they had. But all well and good. I'm sure the CBN governor will be happy with what he's saying. All right. Finally, Coronation Insurance also put out some numbers last week. Pre-tax profit of 2.6 billion for the insurance company, which was up over 5,000%. Like, wow, yeah. So insurance company is doing pretty well. Coronation is, part of, I don't know what to call it, part of the Axis Bank family, but I mean, they kind of have common shareholders, and that's one, insurance company that I've been watching for some years now, because of its potential being, when you're a member of a certain kind of family, then you can always, grow in tandem with that family, and you can always sort of have that economies of scale and benefit of being a member of that family. So probably one of those insurance companies that you want to pay close attention to. Yeah, so that has been Follow the Money for the week. Are there questions that you have that maybe you want me to answer, or any stock that you want me to deep dive into on this show? Of course, you can always let me know that. Even if it's a foreign stock, just let me know. All you need to do is just look for me on any of my social media handles, Instagram or Twitter. Just send me a DM or send me a message at Ugodre, or hit up on Nairametrics on any of the social media platforms at Nairametrics. And then, if you've not subscribed to our WhatsApp channel, you probably want to do that right away, and so that you can get all our nuggets on our WhatsApp channels. That has been the show for the week. I hope that you're successful in your investing plans this week, and more importantly, it's important that you're able to get fuel so that you can go to work. At least do things that you need to do. At least have light in your house. Do have a profitable week ahead. Goodbye.